हाय वेद।
नमस्ते। हाय हिमांशु जी। हाय
कैसा है?
सर, हाउ आर यू बोथ? कैसे हैं आप दोनों?
बस बढ़िया।
So I what I did also among all the series of responses which we have received, I have just extracted 15 questions. Among those 15 questions, also some of them are in similar nature only, like where people are trying to ask if we have new FPOs, then what sort of arrangements, systems, documentation, or even relationship
हम्म।
should one have also with lenders also. So these are some kind of common questions which came up across. थोड़ा ग्रामर में लोगों के थे, अलग अलग वर्ड्स यूज किए थे, बट मीनिंग एसेंस वाज सेम ओनली.
राइट।
आई थॉट कि
ठीक
आई
है।
विल टेक सम टाइम आल्सो ऑफ योर्स एंड अदर keynote speakers also. So Murray sir, I'm sure you would have found it useful.
Yes, yes, yes. I have rearranged them into buckets
हाँ.
based on
But
similarity in
but
questions.
not sure कि whether we will be able to cover all those
No,
15.
no, we will cover some of them, not all.
and
Yeah,
and if possible, we could keep some time still available for any new questions to pop in also.
sure, 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 sure. Yeah, yeah. Right.
So what I realized ki this APMAS ka premium account which I'm using supports only premier features for Zoom meetings,
Hmm.
and for Zoom webinars there is another purchase which one has to do, in fact.
Hmm.
So in that, you can have
Hmm.
500 plus more members. Then you can have a dedicated session or having only the speakers, and then all others will be on mute and video. And matlab, they can put their Q&A and chat section. So
Hmm.
I checked with my
Yeah,
IT
separately
team. So you have to
Q&A अलग
purchase.
और chat अलग होता है। हाँ।
That's a
हाँ।
70,000 ka purchase item also.
हम्म। बाद में देखते हैं उसका।
But
अभी
it's of handy.
ठीक है
It's
अभी
of
तो। हाँ।
वो काफी इस्तेमाल में भी हैं चीजें वो.
सो सर अभी इसका हाउ हाउ विल गो अहेड लाइक फर्स्ट विल मेक द इनिशियल रिमार्क्स ऑन आवर वर्क ऑन एफपीओ फाइनेंसिंग और उसमें क्या क्या चैलेंजेस है और फर्स्ट इनिशियल में विल नॉट स्पीक अबाउट चैलेंज लाइक हाउ शुड वी गो अहेड लाइक इन इनिशियल 5 minutes. So I will make a kind of a 5 to 10 minute overview, and then we will just get into a chat, a Q&A model. Hmm. Okay. So then whatever question is posed to you, you can respond to that. And then if there's something additional that you want to say which is relevant, you can always add that in. नहीं पहले प्लान था ना कि 5 5 मिनट नहीं, इनिशियल कुछ
वो बदल
डिस्कशन।
गया अभी।
हाँ ठीक है, दैट्स गुड।
क्योंकि टाइम कम है और
हाँ
इतने
एंड
लोग हैं,
व्हेन पीपल स्टार्ट
देन
स्पीकिंग
वी
नो
विल
इट
नॉट
विल।
बी एबल टू कंप्लीट, इसलिए मैंने उसको चेंज कर दिया.
It will be difficult to make give it a flow, so it's better
करेक्ट.
that. Yeah,
करेक्ट.
no
करेक्ट.
problem. Yeah.
इफ दैट वाज देयर, फोर वुड हैव बीन इनफ. अभी 7 लोग को बिठा के
Hmm.
करने हैं. And Murray sir,
जी.
one more point. I'm not sure in this short packed time of 90 minutes how we will be able to pitch or bring everyone. But if towards the end, while concluding, if
Hmm.
we could have one or two, way forward also, like what next after this particular discussion. Probably like last time when we discussed, probably we could have another talk series, on similar thematic area.
Hmm.
So something on those lines, if we
So
are planning to do like that,
the
yeah.
way this is designed, it will not flow towards an action points. So उसको force करना मुश्किल है. Trying to force it into an action points will not
Hmm.
even work. Action points are not in our hands. So
Correct, correct.
it's
So you
mostly
can,
policy level. Yeah.
based on the discussions, you can decide action points. Organizer.
Yeah.
No,
Like you will come up.
action point probably would have been the appropriate word,
Hmm.
but more of कि just like one example I gave कि ये एक suggestion हो सकता है कि next thematic में we could have a discussion on blended financing or any other
हम्म।
relevant
तो मैं
topic to
अपने अपने
continue.
अपने जगह से लॉक कर लूँ।
Anyway, so
Right.
I will just take some time to coordinate and invite others also. Just a
Sure.
quick final follow up. And
Hmm.
meanwhile, three of you, Narender ji, namaste, good
Hi,
afternoon.
sir.
And
Good
Hi,
afternoon.
Narendra.
Namaste.
he also
Hi,
has
Hi,
sir.
joined.
Namaste.
Narendraji.
Good
We have
afternoon.
one more speaker, Mr. Patra, also joined. So,
Right.
Mure sir, you guys can continue your discussion. I will just come and go out and come again then. Yeah.
Oh, okay, okay, okay.
Think whether he has made you host.
No, I don't. Ah, it
Ask
is.
him to. I ask him to make you host. No. It,
I suppose it is. नहीं है.
no
Yes.
problem. Then I think they will open that. Keep it open. APMAS वाला ID.
आया क्या अभी?
हाँ स्क्रीन तो आ रहा है
हाँ.
नॉलेज शेयरिंग सेशन.
आया ना स्क्रीन.
हाँ स्क्रीन इज दैट स्क्रीन आ गया.
ओके, ओके.
Hello. Hi, this is Krutti Patra.
Oh, hi, Kruti. How are you?
Hello, sir. Good afternoon.
Good
I'm good.
afternoon. Was this background you're somewhere or
I
you?
was on a vacation, but
Uh,
since I got a call, so I thought let me join.
oh, great, great. Where are you? Vacation where?
Actually, at my hometown, somewhere in Odisha, Angul, if you
Oh,
are.
okay. Which place?
Angul.
Angul. Oh, we know
Good.
that.
Hi, Himanshu.
Hi Kruti ji.
So doing what? Just relaxing or doing something?
Actually, our agri vertical was in Baroda, and now it has been planned to shift to Mumbai. Uh,
Hmm.
7 years back, we came from Mumbai to Baroda, but there is some decision to take it back. So I thought,
Oh.
before getting into a hectic life in Mumbai, better to go to hometown and relax
Okay.
away from Mumbai.
Good. Good. And you have quarters there, I suppose. So accommodation not issue.
That should not be an issue. But
Hmm.
yes, because the number of people are growing year on year at corporate businesses, so we never know.
Hmm. Hmm.
So, Patraji, if you are totally new to Mumbai, or since you would be now settling in Mumbai, I am from Mumbai. In fact, I just came from Mumbai today morning.
Okay.
So, life is not at all good over there.
Yeah, that's also. Actually, I have been there for multiple occasions, and I stayed there for a long time as well. So,
Hmm.
at least shifting from Baroda to Mumbai is not at all a green flag.
Uh,
Fine. So I think we should wait for the people to join, and then.
right, right, right.
So, Emmanuel sir, you have to be a little soft on me.
No,
I
no.
think the people,
Not at all. There's no hard question for you.
everything
Hi,
looks like
Kruti. How are
people
you?
need to fire a lot of questions to the banker. So
Hmm.
I, as an active banker, has the bigger responsibility to.
I know, I know, I know. Yeah, we just setting a very positive tone to the whole
Yeah.
discussion. Not going to pin down anyone. Good
Hi, everyone. Good afternoon.
I,
afternoon.
Hi, Kruti. How are you? Hi,
yeah,
Himanshu.
Hi
smarter
Bala.
specs.
Sorry?
I'm saying you look more smarter with these specs. All
Thank you.
line, mustache line, everything.
Thank you.
So Bala, how was running is going on? I didn't
Oh,
see much up.
yeah. 4 days a week running. Yeah.
Great.
This year, 4 marathons planned. Yeah.
Oh,
Mhm.
great.
Hi everybody.
I,
Hello. So we had a large number of registrations, 80 plus.
Huh.
yeah.
Very.
No, we need to see how many are while we are actually doing it. That's a problem. Is no.
Not an
If
issue. Not an
40,
issue.
50 will come in, that's if
That's
it
a big
is,
number. Yeah.
but the topic is very interesting. People should join. There is
Mm.
no doubt about it.
Yeah, good afternoon. Good afternoon, all.
Hi,
Good
good afternoon.
afternoon.
And then Wednesday.
So we don't see your photo.
I hope I am audible.
Oh, yes, you are.
Very much, yeah.
Ah,
Yeah.
Ved,
Audible.
you can change your APMAS to Ved hyphen APMAS. That may be better. Your name.
Sure.
Yeah, because people may want to know.
Pooja, good afternoon. Whether I am audible or visual?
Hello, sir. Both, sir.
Oh,
You're audible as well as you're
okay.
visible, sir.
Great. Fantastic.
Hmm.
Hi, Pooja. Hi, Shantanu, sir.
Hi. Nice.
Hi,
Connect.
sir. How are you?
I'm all good. Thank you.
Hi, good afternoon. This is Sadanand from FDRVC.
Good afternoon.
Hello,
Yeah.
sir.
Hi, sir. Hi.
Hello, Mahesh. Hi, NKM. Oh, NKM is there.
Oh, okay. He was traveling or somewhere, no?
He's in, yeah, Puraput. Hi, Tarun.
Koraput for that landscape wala thing.
Good afternoon, everyone. Mahesh from APMAS.
Oh,
Yeah,
good afternoon.
good afternoon,
Hi, sir.
Mahesh.
Hi, good afternoon.
Daku Mahesh Singh.
Hi, Murray. Hi, Moish.
Hi.
I'm here just because I could not stay away, but then in the conference, I'm taking headphone and sitting.
Hmm.
No,
No, you
no.
are
Thanks for
very
joining.
much required in camp, sir.
Yeah.
So I'm with the headphone, but I couldn't miss. That's why I'm thinking.
Is the thing over there or going on still?
No, going on.
Oh, nice. Okay.
So when do you get back?
Tomorrow night?
Oh. You go to Vizag to catch the flight or?
Yes, Vizag.
Okay.
Wait, how do we go? We wait for a couple of more minutes for more people to join.
Yeah.
We
No, we
have
said
quite
three,
a
no?
sizable number of people who have joined in. Probably while we are
Yeah, but
setting the context, since we have less time also, a short packed, in fact, 90 minutes with whole bunch of experiences and insights coming in. So we'll begin, Murray sir, with your due permission
Sure,
of that.
please, who
Yeah.
would introduce, or do we straight get to the subject?
No, I
wait.
will. I will just set the context also to what about this is, so that for others
Okay,
who have not been part of our conversation, so for them
right.
it might be also helpful. So welcome, namaste, and good afternoon to one and all who have joined for this very interesting participatory session on financing to FPOs. So on behalf of BAFA, which stands for Bharat Alliance for FPO Acceleration, which is a platform in making, inviting all key multi-stakeholders from the FPO ecosystem to come on one platform with the very strong idea, proposed idea of how to accelerate the FPOs. While we have FPOs being formed across the country, so the initiative of BAFA is lies on the fundamental of what will happen to the FPO in the longer run, and how to sustain the FPOs who already have done good amount of progress and done good progress also with initial years of support from different context and stakeholders. So we have been doing series of activities. We have been still in the foundation stage of BAFA. So in one of the key verticals under BAFA initiatives, the idea was to conduct series of thematic sessions on different ideas, topics, themes pertaining to the evolving of the FPO ecosystem or the vision of BAFA to, in short. So this is the first thematic session titled Financing to FPOs. Without taking much time, I would also like to invite all of our key speakers, panelists, moderators also. So we have Mr. Emmanuel Murray, who has joined in as the investment director from Caspian Impact Investment Advisor, who would also be the moderator. The key responsibility, sir, is on you, in fact. And from here onwards, I would also give the charge to you, in fact. But apart from that, we also have keynote speakers and panelist members. Also, we have Mr. Shantanu Penseji, who is also the former CGM, Agriculture and MSME Financial Inclusion from State Bank of India. Thank you so much, sir, for joining in and for accepting our request also. We have Mr. Narendra Kumar Ediga, Head Farmer Collective PPP from Samunnati. Hi, Narendra. Welcome to you also.
Thank you.
We have Mr. Himanshu Vagela, Senior Manager Agriculture and Climate Finance from FWWB India. Welcome
Hi.
to Himanshu also.
Hi, Ved. Thank you.
We have Tarun Katoj, co-founder and head value chain from D-Vara e-registry. So big welcome to Tarun also.
Good afternoon, everyone.
And then we have Mr. Krutti Patra, agriculture products specialist from Bank of Baroda Corporate Office, Mumbai. Welcome to Mr. Patra also. Last but not least, we also have the youngest speaker in the house, Mr. Mahesh Alagappa, who is also a
Good afternoon,
consultant
everyone.
for credit linkages to FPOs at APMAS. Mr. Murray, over to you. I'm giving you the charge, but before that, one or two basic etiquettes for all of our esteemed members, participants, speakers who have joined. Humble request to the participant to please keep your mic on mute, so that the speakers and the panelists have maximum amount of time and without any disturbance to share their own insight and experience. I would also request Muriji to also give the design while he would be speaking. Apart from this, if there are any queries, please feel free to express your thoughts, ideas, inputs in the chat section. As the organizers will try to capture all those points already raised. And also for people who are joining now, you can also give your brief introduction in the chat section. And to share any point, you can feel free to raise your hand towards the end also. So over to you, Murray sir, then. Yeah.
Thank you very much, APMAS and BAFA and Ved for organizing this session. The format of this will be as follows. I would initially, for about 10 minutes or less than that, give a little background about FPO financing. And then we would get into a conversation structure, a chat structure where I would be asking questions to this distinguished panel, and they would be responding. That's the flow that we will follow. Around 15 minutes before the session closes, we'll open it up for the audience also to ask questions, if any, which again, Ved could moderate. So thank you so much. As you can see, most of the panel members here really are available to talk to. So this is a great opportunity for all of you to also listen to them and ask questions from them. Briefly, I think how many FPOs are there in the country is still a question mark, but at least there are 40,000 plus. And of these, cumulatively, as of today, around 4,000 have been credit linked. So about 10% of FPOs, which is not a small number as such, are credit linked. The second point is that NBFCs continue to be the major providers of credit in this space. Till 2 years ago, they were at close to 90%, but over a period of time, banks like State Bank, Bank of Baroda, IDFC, AU Small Finance Bank, and Axis have taken a lead in this space and started lending to FPOs. And the most recent of these is the cooperative bank structure. Andhra Pradesh State Cooperative Bank, along with their district cooperative banks, has started lending in quite a big way into FPOs in Andhra Pradesh, where 80% of the funding comes from the State Cooperative Bank and 20% from the District Cooperative Bank. And this model is also doing good. But ultimately, everyone wants to have a bank loan. So nobody is happy having a credit facility from the NBFC. And that is why this session would also focus on that. And why a bank loan is better is because it lowers the cost of credit. It provides you a greater degree of flexibility, and you can do all your banking services through this bank to which you would be borrowing from, and you would have a relationship. And it could do multiple kinds of facilities and also support in business development, because banks work with corporates, work with businesses. So there would be opportunities for you to use leverage the banking network to help you to do your business also as an FPO. But FPO's experience with banks has been mixed. These are some, let's say, live information. These are not made up by me, of the issues that FPOs have faced with banks. Most of the time, the bankers visit in the fourth quarter, and then more or less there's some push from the corporate head office to have a look, and then they disappear. There have been instances where banks have been telling you first transfer your current account to us, then we'll give you a loan. Bring along, farmer finance for us, and then we'll do a loan. So these are the kinds of issues that FPOs have faced, and not every instance, but these are some things. There's no clarity on decisions. There's no timelines given, so you don't know whether you're going to get or not. And the other one is, somewhere in the country, somewhere in Bihar, some FPO doesn't repay an installment, and all the FPOs of the CBBOs, their accounts are frozen, and transactions are stopped till that account is regularized. These are the kinds of uh, situations that these FPOs have faced. Recently, again, there have been issues of levying of uh, annual maintenance charges and such charges on FPO accounts without any prior intimation. Loan structures, again, this is more to do actually with NBFCs rather than with the bank loans, but loans with an EMI structure do not work, especially when you need seasonal kind of credit. Now, just for everyone's information, I've put out the data of the latest lending numbers, especially of institutions who are present in this panel discussion. And these are quite impressive. The growth data is quite impressive. As usual, Samunnati is the leader in financing in FPOs, uh, followed by, of course, Napkesan, who is not here. I'm just a director there, but I just put the numbers. SBI, uh, Bank of Baroda, and FWWB. FWWB, although small, has made a significant kind of impression, and is a very important player in this space. Right. Sometime back, Krishnamurthy is also joined on this call, did a survey with FPOs and asked them, 60 to 70 FPOs responded to his questionnaire, and what were the barriers to loan applications. So some of the information given here, that the application is cumbersome. This is more to do with the bank loans rather than with the NBFCs. And of course, these are their views. I think the lending terms, when they are talking about, is more about the NBFC rates. The bank rates are, of course, lower relatively. But these are some factors that have been hindering credit flow to the FPOs: the documentation requirements, the collateral requirements, inflexible repayment schedules, people asking for all kinds of conditionalities, all directors should sign, and those sort of things, right? Wherever loans have been given to FPOs, and now this is also feedback from our questionnaire that shows that overall their business has improved. Market access has been expanded, production volumes have gone up, quality of produce has been improved, better price realization, and increased member income. So these are some responses to the survey showing the positive impact of credit flow. But of course, in a few cases, again, on the right side, if you see that at least in 19 cases, 19% of the cases, they say that a bank loan has not changed their life. And in some, it has worsened the situation. So if you take a loan and don't use it properly, there is a chance that it would impact you adversely as well. Okay, so going back to the objectives of this session, and this is a last slide. It's to create awareness about lenders to FPO. So those from the FPO circle who are present today can know about who are the lenders, what are their views. to become debt ready. Apologies for the spelling. To help FPOs make informed decisions while borrowing. So the overall philosophy is no FPO that is debt ready should remain unserved, and that no FPO has a good business should be underprovided with credit. So these are basically, I think, the higher level objectives that we are trying to achieve through this 1.5 hours of webinar. And with this, I move over to the panel discussion. So as the format goes, I will be asking questions to the panel and they could respond. Please be brief so that we can cover. We want to cover a lot of ground. So as the largest banker in India and one of the senior most bankers, Shantanu ji, thank you for joining us. So I would like to start with you and ask that in the 1 year between last year and this year, you were able to grow your business from about 40 to 256 FPOs and from 17 crore to 86 crore of lending. So how did you achieve that, and what were the within the bank, how did you organize yourself to be able to make this kind of 6x growth in FPO lending business?
Yeah, thank you. I hope I am audible.
Oh, yes, please.
Yeah. Thanks for the compliments, but this 6x growth is actually very minuscule compared to the number of FPOs we have in the country. I hope I have 2-3 minutes to respond.
Please.
Yeah.
Yes, sir.
As of now, I think the recent data shows, I mean, maybe May end is around 130 crores instead of 86. That's how the data is, and the number should be around 330 or 335. But the majority challenge lies with the governance structure of FPOs also. I mean, if you see the challenges, why the FPOs are not getting funded by the banks is principally just like SHGs took almost 10, 15, 20 years to stabilize in this country. And there is a whole, I mean, the network of, it started with NABARD and then we had NRLM. So similarly, FPO ecosystem is also an emerging ecosystem in my opinion. It will emerge for sure. Maybe it takes some more time and effort by people like you and like-minded, the associations or NGOs or whatever. The thing is, the regulations pertaining to FPOs are exactly equal to what is required by the company. I mean, they are registered on MCA portal and they are basically corporates. So all the compliances which are required for a corporate are also required for FPOs. This is number one. Number two, in most of the cases, I mean, I will go to your question maybe in a minute. The FPOs may have certain challenges in documentation or being bankable. So what we could do in last couple of years is having a nationwide FPO Connect program, and thanks to APMAS, thanks to Krutti, thanks to even Ministry of Agriculture, with whom we did 3 or 4 such kind of full day workshops, where we actually do a full day workshop with at least 50, 55, 60 FPOs and give them digital literacy, financial literacy, the product presentation of SBI. And we also understand their business model and give them in principle approval on the spot. Although the experience is, despite giving in principle approvals maybe around 30, 35, the final conversion may be 8 to 10. But in my opinion, the start has been moderate, but at least there is a consistent start. And going forward is the initiative like BAFA, which is going to be very, very valuable for this country, or the FPO ecosystem, where we not only get all the stakeholders together so that we understand the bank's perspective, the NBFC's perspective, and also make the FPOs stronger in governance and stronger in their business model. I mean, I have a lot more to speak, but there are so many speakers.
Yeah,
But
thank
the
you,
thing
sir.
is,
We'll come back, sir, surely.
engaging with the stakeholders has been the only key, and can be the only key, because last line is collectives. In India, I have seen that a small farmer as such is very fragile. But collectives of people like self-help groups, PACs, and the cooperative societies, minimum 3 models are there in this country which have succeeded. FPO again becomes a fourth model of collectives, and it will definitely succeed.
Thank you. Thank you so much. So we go to Krutti from Bank of Baroda. One of the first banking group to do FPO financing. So Kruti, my question to you is, how do you discover FPOs that are credit worthy? What methods do you use to find and invest or provide credit to these FPOs?
Yeah, hi. So, am I audible?
Yes, you are. Please go ahead.
Okay. So first of all, thank you, BAFA, for this invitation. I believe I would make some sense to the audience, and definitely I'll take back something so that we can rework on the product designing and everything. So coming to your question, Emmanuel sir, FPO, when you talk about finding the FPO, like you yourself in the starting introductory slide only said, although there is a claim of about 40,000 FPOs, but 4,000, hardly about 10% are on the banks, rather probably bank and NBFC put together. So basically what is happening is we have a lot of directories of FPOs and all that, but when we reach out to them, when we do a funneling and all, then we find out that most of them are either not in picture, or some of them are not in physical available. So going through the directory to figuring out the right FPO is not at all going to be the scenario. Never been the scenario in the last 3-4 years. So for us, we tried to reach out to the known CBBOs who have been well known in the area of developing, promoting FPOs. Actually, when we started the product in 2017, we started working with few state governments like government of Maharashtra, then government of MP. Then we identified SFAC and other promoting agencies as one of our channel partners to identify a sort of FPOs. But then gradually we realized that when we talk about mass level of activity, then we get all sort of FPOs coming in, which do not have any clarity on the proposal. They don't have clarity on the business plan. They don't have, like Shantanu ji said, they don't have a well governance structure and all that. So then we found out that the best way is to identify good CBBOs, to work with them, to get to very clearly ask them like which are the number of FPOs that you would like to recommend if you want to be the backing stone for those FPOs. Then they would come back with 5, 4, 6 numbers. And then I generally, what I do is I give a format to them saying that you give me those set of data and I do the evaluation on my self. And if I see things are good, well to do, then I extend it to my field level and processing team so that the conversion happens good. So overall, what I would say is the role of CBBO has been the best and been the most in order to get into the credit linkage, because promotion of FPO has happened. Now everyone knows what is an FPO, what is a FPO, what FPO can do, the future, everything. But when it comes about linking them with the bank or the NBFCs, then it is again the role of CBBOs which become more essential for us.
Thank you. Thank you. So Narendra from Samunnati, Samunnati has been the pioneer in this space and been able to successfully build a large market. In spite of all the present guarantee structures and other things not being there, you still were able to do such a massive scale of financing towards FPOs. So what has worked, or how were you able to build this market from ground zero?
Yeah. Thank you, Emmanuel sir, for this opportunity. I would like to just share my thoughts. What Samunnati did differently to capture this FPO segment? Really, this is an important question. I would like to explain you. See, what we have done is we have tried to understand the segment. FPO is what it is. It is a concept. It is a fusion concept between a cooperative and a commercial entity, right? Neither it is a complete commercial entity nor a cooperative where political intervention or something is like that, right? So what we have done here is we have tried to understand the segment. You cannot compare them or force fit into a finance product where we are using that product to gauge a regular commercial entity. It is completely different, right? If you try to force fit it, most of them will fail in it. They cannot be fit into that segment, and maybe we'll be ending up like funding only 10% or 5% of the total population. While there is huge potential, why still we are not able to fund the large population is what Samunnati has done here is we have created products that suit the vertical. If you
Right.
first of all, if you look at the FPO segment now, we have come up with various products. We have segmented the FPO population. We have segmented the FPO population into various segments. We said that incubation stage FPOs. We said this beyond particular point. We said these are classified as growth segment FPOs. And in another classification, we said these are matured FPOs. We had created different underwriting criteria for various segments.
Interesting. Yeah.
For example, if you look at an incubation stage FPO, you cannot expect a balance sheet. You cannot expect business flows in their bank statement. They have just started, they have collated all the farmers and wanted to do business.
Right.
What can work for them is we have come up with a very simple product saying that, okay, you will be eligible for 5 lakhs if all your directors have good credit scores. We have not seen their business capability, business, business plan, etc., etc. With that, if they start doing business, we are graduating them to next stage where we said after 6 months, I'll give you 10 lakhs.
Interesting.
And after maybe a 1 year or so, we have created another product for this growth stage FPOs where we are giving up to 25 lakhs. There we are asking a bit more documents, like what is the business plan. While we are confining ourselves to bank statements and audited financials, we are not going much deeper into the financial ratios and all, like how you gauge for a commercial entity.
Right, right.
But the moment we are increasing our limit, obviously there is a risk there. So the classification that we did, a matured stage FPO classification, where our exposure is higher, there obviously we have to choose the FPO right? We cannot randomly give an FPO the higher amounts and end up in losses.
Right. So
This
I
is
think,
one
dimension,
sir, that Samunnati has done.
Great, great. Yeah, so we'll just move
Right, sir.
to Himanshu. We'll come back to you.
Thank you.
It's so much to learn from Samunnati's experience. Himanshu, how are you different from other lenders in this space, and what is the philosophy on which you operate?
Yeah. So thank you, BAFA and Emmanuel sir, for such a great opportunity. So actually, FWWB, we have started financing to FPO in 2010. So FWB approach, we have our, we are also providing training and capacity building support. So we have multi-stakeholder approach, like we partner with CBBOs like Krutti, APMAS, and earlier we started with ASA. Then we partnered with marketing company, New Age social marketing, social startups. They are providing marketing services to FPO. So that is how, and our focus has been always on small and nascent FPO. So it is very difficult to bucket them, which is growing and which is mature, because it's based on vintage or it's based on their financials. So ours is very multi-layered approach. Like we sit with them, we understand their business, and we help them and design their business plan. And then we curate the tailor-made products, like it is seasonal, short-term loan and some similar to CC facility. And we try to bridge the gap with our capacity building support. Now we have started in a more focused way. So all in all, we are playing a catalytic funder, catalytic institution. Our objective is to make them credit ready, like FPOs, how we can make them credit ready and how they can move to the banks. Because banks are the final destination. So many of our old FPOs, they have now moved to the bank. But the problem with this FPO sector, we keep getting new challenges every year. Like you cannot, FPO business is not a smooth ride. It's always a bumpy ride. So you need to be very sure you cannot project the growth. Like this year, they have done 50 lakh business. It doesn't mean they will done 1 crore business next year. They must be end up doing 5 lakh also.
Right.
So it is all interlinked. Lot of variables are there. So we need to understand the problems, and as a sector we need to come as a whole and then provide the solution. So still we are talking about same issues like governance is the major issue. Vested interests are there, no one is taking the ownership. So we try to address those issues through our capacity building program. But CBBO and governance and record keeping is one of the biggest challenge in FPO. So we try to provide them through our capacity building support, how to maintain basic bookkeeping. We encourage them to reduce the cash transaction so we can
Yeah,
monitor the.
thanks, Himanshu. But isn't that what CBBO is supposed to do? Isn't that their job?
Yeah, but most of the CBBOs, they have promoted so much FPO, so many FPOs that it is difficult to manage. So when lender comes in, then it makes, we have different kind of lens, and we have capacity building and credit lens also. So our assessment is more of appraisal as well as need assessment.
Right.
So we try to address those issues through our capacity building program.
Thank you. Thanks. So I'll go to Tarun, and this question is more about using FPOs as financial intermediaries. There is a view that these are very low capitalized companies. The share capital belongs to the members. The systems and processes, as Himanshu was saying, are even otherwise weak. So do you think, and from your own experience, can FPOs operate as financial intermediaries in providing credit to farmers? Tarun.
Thanks for asking, sir. It's a very relevant question. But as I'm odd man out, we are not lending to FPO. So just I'll brief in 2 minutes what we do.
Sure. Let's understand.
And then I'll come to this question, sir.
Sure.
So it's an important, there are two aspects of lending. One is lending to the FPO, but there is equally important pieces. Farmer having finance to buy from the FPO, because if traditionally farmers are buying from the input agri dealers, and they are like rooted for that, and when it comes to even the FPO providing the goods at a competitive price, still the dealer is giving on credit, so they prefer that. So it's said that around 70% of small and marginal farmers doesn't have access to institutional credit, mainly because they don't have credit score. So what we do is, as a D-Vara e-registry, we use remote sensing and AML technology to study the activity of the farmers on the field. So in last 3 years, how he has performed, his land productivity, the impact of climate change is studied. So 11 parameters, 200 data points is studied, and then we give up a score, which we call as a Khet score, as simple as Khet ka score hai. And based upon that Khet score, we analyze the tentative cash flows of the farmers, and then lending happens to the farmer. So as of now, we had done lending to more than 32,000 farmers with 150 crore of lending has been done. Our mode is FPO. Why FPO? Because when we go on the ground, it helps in building the trust, because FPO is already there. They have a social capital, so that really helps. They have large number of farmers, 500 to 1,000, so it gives a scale. Also, one is lending, but we also ensure that we help them building the resilience as well as capacity to repay. So there we are providing them the inputs, advisories, and somewhere helping in the market connect. So as FPO has infrastructure there,
Right.
FPO have licenses, FPO have a shop where then could act as a, you can say, a logistics point for us to provide the inputs to the farmer. So that really helps, and it helps in our cost optimization. So from that point of view, we use FPOs, but we are not dependent upon the FPO as such for our business. So
Right.
what we are using is their strength, their social capital, their infrastructure. And what FPO gets from us is whenever we are doing lending, they get a commission on lending, successful lending. Whenever the input sales is made, they get a commission on that. Whenever we are doing co-leasing agreement with the FPO for using their space, they get rent from us. And most importantly, they are getting business opportunities from the member farmers, because as the lending is made, the FPO sells the produce to them. So the profitability is increased, membership is increased. So I'll say yes, there are challenges in the FPO, and we also face. In the idealistic model, FPO Act play this role, but at times FPO is not working, FPO is not opening. And there is a lot of attrition, as Mr. Himanshu ji said. If 1 year it is 50 lakh, it could be 5 lakhs because there could be a dispute in the BODs. It could be FCO has gone who was doing the business. So yes, that really hampers our work. But yes, we are not dependent, so not at that level, and we are able.
So just a quick question: are these FPOs promoted by D-Vara, or the other promoting agencies also you work with?
So D-Vara itself has promoted 52 FPOs,
Right.
but now we are working with 100 FPCs.
Oh, okay.
So around 80%. So in our promoted FPO, around 20 FPOs we have started lending, and 80s are non-DR FPOs, the non-D-Vara FPOs. So it's mix and match, well balanced. And it initially we started with our own FPO, and then we have grown, because with our own FPO there is a limitation, but as a cluster-based approach, we keep on adding the new FPOs.
Right. Interesting. Thanks so much. So we'll go to Mahesh now. And, while traveling on the trains, we see, this advertisements of Rishte Hi Rishte kind of things. So this matchmaker between FPOs and banks is what the role you have played over 1 year. So how successful have you been as a matchmaker, and how unsuccessful have you been?
Yeah, thanks, Emmanuel, and thanks, BAFA. Wonderful question. Matchmaking has been a little tough. But nonetheless, where the match has agreed, जब 36 के 36 गुण मिल जाते हैं तो बहुत बढ़िया हो जाता है. But to get those 36 गुण to meet is very, very tough. Like, for example, if I can dwell from my own experience, we conducted about 11 to 12 programs with SBI on the various connect programs, like what Shantanu ji was telling. We had over 600 FPOs who had registered, and about almost 400 of them got what we can call it as provisional sanctions across states. And the conversion rate, like what exactly Shantanu ji was telling, was not better than 8 to 10%. The issues which I could identify was that in some places, the stringent requirements of the banks in terms of CIBIL rating, in terms of the balance sheets, in terms of certain things, they came in the way. Although SBI, credit to them, they, except for CIBIL, on which they did not have any type of a leeway, but some of the other procedures, which we can call it as the credit policy guidelines, they were in a position to dilute them a bit, not very drastically, but still within the framework. But still, what used to happen is in some places, the banks were not so proactive. I can give the example like of course, not pointing finger at anyone that, okay, this was doing good or that was doing bad. But Madurai circle of the SBI group was so active, but the FPOs of Madurai circle backed out. In some other places, again, I won't name this thing because this was a very positive thing, so I have named it. In some other places, the FPOs were running after the banks, but the banks were not so very proactive in lending to them. But now I have seen one basic thing is that, and this point, which I think we have also through the BAFA and other agencies, we are trying, and what Shantanuji did make in his opening remarks, that we need to drive home this concept that FPOs are collectives of small and marginal farmers. The guy may be having a big name as a director, okay, director FPO, director, but he is basically a small and marginal farmer. You can't equate that person, that director, to the director of a huge company. Whereas as per the law, as per company law, he's also a director. Reliance का भी director है. So this is it. The marriaging, okay, not very successful, but I'm very hopeful because to just share with you, I was in the bank when I was working in the bank when the FPO, when the SHG lending started in 94, 95. And like what Shantanu ji did say, we are passing through that stage of FPO SHG, if I can say.
Right. So I will again go back to Shantanu ji and ask about co-lending. So what are the prospects of working with other NBFCs and do co-lending in this space? How has been the experience? Would you recommend other bankers to do it?
Yeah, in fact, as pointed out by Mr. Mahesh also, co-lending, the RBI is coming up with a revised circular. In fact, they had issued the draft circular, which they want to expand the scope of co-lending. But as of now, if you see the co-lending today in India, and I will speak about this scale because when we started with the APMAS, doing 300 FPOs or 330 FPOs were never imagined. I mean, we wanted to do much more. We could not do, that's a different issue. But it's about scale. I mean, the farm credit as of today, as per RBI data, maybe 3 months old, is somewhere around 22 trillion rupees. So when we talk or compare with farm credit, total farm credit of 22 trillion, or even the KCC is somewhere around maybe 15 trillion. That's the outstanding KCC loans. Number of FPOs funded by Bank of Baroda or SBI 300 or 200 or even by Samunnati 1500 is a minuscule number. I mean, we are not even started, basically. Multiple issues are there, no questions about it. But when you come to banks, one is that banks would do normally in all across. It's not about only SBI. All banks are accustomed to do the retail lending. That's how the retail flow has, I mean, in last 1 decade, the retail has pushed to its limits.
Right.
So doing agriculture itself is a challenge. And in that, what happened in Madurai or what happened, in fact, I am also aware of great movement that is happening in West Bengal, which we are not aware of, or even Northeast. And the FPOs there are doing really great, number one. Number two, when you see of NAP Kisan giving collateral-free loans, the number of days which were required till last year for NAP Kisan guarantee to be approved was almost a month or more. And therefore, some of the data is not captured in the NAP Savrakshan data, not NAP Kisan, sorry, NAP Savrakshan, because NAP Savrakshan guarantee used to take a lot of time. So many FPOs in SBI are covered by CGTMS. So that data is not captured. So the real data may be much more than what we are looking at. But there are problems or challenges and opportunities from both the sides. I mean, as rightly pointed out by Mahesh also, business plan by FPO is the fundamental thing. What we must do, all of us must do, and I will also volunteer in that to the extent I can, is to create stronger FPOs. Bank credit or NBFC credit is only one part of it. Anyways, the farmers are getting credit. I mean, the myth that the farmers are not getting credit or some risk scoring model. No, boss. If you see the total PM Kisan database of this country is more than 9.5 crores. I will speak on scale, not of 300 or 100 or 100 crores or 50 crores. That is not the point. The government did last year Ghar Ghar KCC Abhiyan, if you're aware about. So saturation of all KCC has been done. So if we say that the farmers are not getting farm credit, there are two ways of looking at it. Yes and no, both are the answers.
Correct.
Because today, no public sector bank can say no to a farmer in KCC because of CIBIL score. I want to make it very clear. No farmer can be deprived of a farm credit because his score is below certain, say 600, 450, 500. That's not the case. It's only when it is default,
right,
the farmer will not get money or farmer will not get credit. And the national data of KCC shows that 1 out of 5 farmers has a default in CIBIL.
right.
And that's a huge. All the banks taken together, and I'm talking of bank of scales. I mean, bank of scale means banks like SBI itself has somewhere around 1,10,000 crores. That is 1.1 trillion KCC, or even 1.15 trillion KCC as of now.
Wow.
So, and all the banks taken together are having 7.5 trillion. So it's not that the banks are not doing, but banks, cooperative societies, the PACs, cooperative banks taken together are giving loans to farmers, no questions, not depending on some score or here and there, because these are only optic models. I mean, honestly, with due regards. So why FPOs are not getting funded, we have to sit down maybe for a day and find out the policy prescriptions perhaps which can be given, because we need to make FPOs regulatory light than what they are.
Right, right.
As Mahesh said, directors. So when the board of directors is responsible, their own CIBIL is not there in good shape. That is one of the key challenges which we have.
Yeah.
Then the business plan of the FPOs, understanding of the concept, why is FPO necessary? Why are you doing this? I mean, let me tell you, my own interaction with multiple FPOs, that when I asked this question to the FPOs, why did you do FPOs? Someone promoted, sir. So that's one of the key challenges. As to let us together, I mean, whichever way we take this BAFA, that we actually promote healthy FPOs, which understand why FPOs have been created and have good governance, and then marry good FPOs with banks, so that what happened with SHG for 20 years, and now SHG is an ecosystem of 2.95 trillion. I repeat, 2,95,000 crores. With a NP of just 1.52% as of March. That's the NRLM data. It's an open website. You can also go and visit and get the data. So 3 lakh crore is a very big amount with SHGs. We can create FPO ecosystem maybe in next 3 to 5 years. If we sit down, understand all the challenges of banks, NBFCs, FPOs, and as collectives of NGOs and initiatives and whatever, present to the government what is required to be done.
Right. So I think BAFA folks are listening into you, and they're going to use your services. I would go back to Krutti again, and since you've been in this FPO lending space for a very long time, do we have a Sachin Tendulkar in FPO lending in the banking system? Can you describe a branch manager or a loan officer who loves lending to FPOs? Have you seen someone like that?
Yeah, definitely, sir. We may not bring a comparison with Mr. Tendulkar, but yes, there are people who have wholeheartedly understood the concept of FPO. As a banker, they understand the probability of the FPO growing further, the possibilities, the potentials further. Because particularly if I take certain examples, then like we have a very good number of FPOs funded in the state of Maharashtra. And then there is a 2 years period from 18 to 19, probably 18 and 19, where we found that when I was finding it challenging to convince branches for a 5 lakh, 10 lakh loan, one of my branch had got a sanction of 1 crore 28 lakhs to one single FPO. So I asked, is it like you didn't understand what is the FPO, or you treated them as an MSME and all that? So that was like a case study for me. But then they said, sir, the business is good. There is a good governance. There is a good backing by Smart. Then the Maharashtra state government is giving a lot of capital subsidies under different programs. So the institution is bound to grow. But yes, there were certain issues probably because of which we could not disburse the entire amount. But then if one army major of mine is able to take a decision to get into crores where my average ticket size is around 30-35 lakhs, then I would say there are a lot of parallel things that's being built up in the system.
Good. Yeah. So Narendra, again, can banks replicate what you're trying to do? Customizing these products and then providing based on the vintage, based on their business model. Is it possible for banks to really learn from you and replicate your work?
Yeah, sir, I would like to just quote few examples. See, if you look at financing in India or to the matter in the world and all. Initially, the only products that we were lending was only term loan or CC, something like that. Later, there were various different business segments that were coming up, and the finance industry has created various products. For example, warehouse receipt finance. That is completely a different finance that was tailor-made for the commodity people. Likewise, for export finance, again they have come up with various products. Likewise, the FPO segment, I would say this is emerging asset class.
Okay.
There has to be a creative thinking, and banks have to come up with products that suit this. You cannot, what I would clearly say is, we cannot force fit FPOs into a regular business loan clutch.
Understood. So their argument will be, these are stray, this don't give volumes. How can
Fine,
we
sir.
invest so much time?
We will not be giving volumes, but at least if an FPO starts, at least it needs minimum 1 or 2 lakhs to start some business. They have to start somewhere. While they have their share capital or whatever, I don't think that one would be enough for them to even lift a one truckload of commodity.
The argument
we
is,
can go in a very small way,
yeah,
in a very retail way, which obviously the SBI can pioneer with, can be the leader here. And the experience with the SBI was also very good with us.
Very good.
Actually, we had a co-lending relationship of 100 crore with SBI, and we could do almost near to some 5 to 10 crores. The only problem where the issue with the SBI was the product that they offered and the product that the FPO were looking at. Yes, all we funded on the ground was a revolving loans, where the money was used by the FPOs to do business and repay it. But the relationship that we had with SBI was a term loan product. While SBI was completely in sync with us, and they said that whatever the underwriting you do, we take. Even they were not involving even in the underwriting part also. Whatever we gave, they happily took that portfolio and they trusted Samunnati to a large extent. But unfortunately, we could not meet the volumes because the product that they offered was not in sync to the requirement.
Let me come in.
Quickly. Yes, sir. Please go ahead.
Yeah, we do not participate in a regulatory violation. So I don't want to speak further on this because this is a privy discussion. But we don't want to. We never wanted to engage into any regulatory violation. It would bounce on SBI at a much larger value in case of penalties than Samunnati. So Samunnati is doing good work. That's okay. I mean, so let's not discuss.
Appreciate your views. Thank you, sir.
Yeah. The only thing is, as I said, ENWR. I mean, what SBI brought was a very flexi product, agri and food enterprises loan, where the concept was earlier, I mean, all banks now are aligned with this product of mine, is that earlier they required 2 years seasoning of FPO and so many. What we brought was a simple 5 lakh loan can be given to a FPO based on NABARD's lendability tool score. So we aligned ourselves with NABARD lendability tool so that even an initial 5 lakh loan can be given based on that lendability tool. And as the FPO matures and becomes output oriented, then the subsequently credit process can go up. And why I have very great faith in banks lending is not about only on the rates of interest or so, is that the FPOs also need individual funding, which only banks can do. They also do operative account.
Right.
Without operative account, giving easy loan to a FPO is like giving only half-baked product.
Yeah, exactly.
You need a bank branch for operations.
Absolutely.
So that's why physical presence is very much required. And therefore, the discussion 30 years back that we don't need brick and mortar branches is no more valid in India even now. After 30 years, I see that even HDFC, ICICI are opening branches because without branches, physical, tangible, the banking cannot be done in India. We need digital backbone, but we need physical presence also. ENWR is one such product which I really wonder why FPOs are not using it. I mean, because what we brought through WDRA is that the concessional rate of interest is available for ENWR backed product.
Right.
But I don't find a single FPO, at least I don't have data of single FPO availing ENWR funding against their produce, because what was thought was they will be a collective of 300, 500 farmers. And because the WDRA regulated warehouses are just 6,000, so a single farmer cannot take its produce. But the FPOs can definitely pool and keep it and give benefit of concessional rate of ENWR funding, but that is not happening. Third is scattered lending. Again, if you go to a branch and a FPO goes to a branch, the branch is not aware about FPO funding.
Absolutely.
I mean, it's like today, I will finish in 1 minute.
Please.
All the banks are very happy doing home loans because we are used to do home loans or car loans. But 25 years back, getting a home loan for a branch was a very, very difficult task. 25 years back or even 20 years back, banks were not used to appraise even home loans because it's a very long duration loan. Now today, everyone wants to do a home loan. Similarly, now SHG ecosystem is now synced into banks. But how many banks are there? I mean, if you see, the majority participating banks are only 5 or 6. In private sector banks, only 2 banks are there, and their portfolio is also minuscule. So it's all about ecosystem maturity, which takes some years, so that the FPO ecosystem itself is strengthened by way of, I mean, if I can say about awareness, acceptance, ease, everything we have to build. So, I mean,
thank you. So
unless we do this
importance of training, capacity building, all
yes,
that.
Yes. Co-lending is just one area where people do co-lending because they don't have capital to actually multiply.
Correct.
That's why co-lending comes into play. But once the banks are into this game, then the FPOs will really flourish in a long way.
That is why we are having this.
Yeah, this is because the FPOs as members will also need KCC. They will also need small insurance. They will also need the Atal Pension Yojanas or the social security schemes, which only bank branches can offer. I mean, at a very, very cheaper rate compared to many NBFCs do cattle funding and do insurance of those. So their earning is through that insurance premium, right? But the case is basic cattle funding has to come at a if not concession, at a reasonable rate.
Affordable rate, yeah.
Yes, affordable rate.
So
So
I
a
will,
lot of work we have to do together
yeah.
To make this ecosystem strong and create a case where the regulations become easier for the FPOs.
Right.
And also we worked on the, I don't know whether NAP Savrakshan or NAP Kisan is there, but last year on certain suggestions in some of the meetings, they have come up with a fast cover, approval rate. I mean, it used to take 45 days for a cover to be approved. Now I understand from NAP Savrakshan is that the cover is approved within 7 days. And maybe in next 3 months, there will be an API integration with banks,
right,
which will make them seamless cover approval, just like CGTMS.
right.
If it happens, that helps the ecosystem basically. Otherwise, a bank sanctions the loan and the cover is not there for 45 days or 40 days. Then the whole interest of FPO goes away, including the bank's interest.
So it is disbursed only after the guarantee is issued.
Obviously, this is again because the CGTMSA guarantee is available in a day. So what the banks do is they apply for CGTMSA guarantee, get the guarantee, and disburse.
Disburse the loan.
Yeah, this is because be it NBFC, be it banks, they are all regulated entities.
Right.
So you cannot just give loans without collateral, without getting aligned with the regulator. We have seen in last couple of years the examples of people who have gone left and right and paid heavy penalty for non-compliance.
So I will go back to Krutti again for a brief while and ask, since your FPO portfolio is also quite seasoned, you've been there for quite some time, what's the elephant in the room, the NPA situation in FPO lending?
Okay. So overall, if I have to say, then on the number side, there are, if we compare it with the regular agriculture portfolio of the bank, then the FPO sector altogether has a lesser NPA. But if we see the number of accounts that we are dealing under the FPO segment, the percentage is on a higher side. So the question that a lot of people are asking is banks being stringent on the bureau scores of the directors, their involvement and all that. Being all that involvement, bringing all of them involved in the loans, still the portfolio is not doing well. So the question of further relaxing the procedures or these requirements might become tougher. So what I would say is that the role of again CBBOs become more important, because wherever in some of the cases when we studied, we figured out that the money has been diverted to create a new business activity. So because no consistency on the business plan, so initially let's say they started with thinking of a dairy unit, then subsequently the money got diverted to starting input shop. So then what happens is, for every business you need to have a cash flow and you need to be there for some period to generate revenue and sustain it. If you keep switching the business activities altogether based on the whims and fancies, then it is bound to fail.
Thank you. Thanks.
But on the number side, yes, the NPA numbers are less when we compare to the overall agriculture.
Right. So I think Shantanu and Krutti, the thing is about a business plan and sticking to that business plan. These are important things. And then you could be successful as an FPO. The good news I have is that we are well ahead of time on this webinar, and I have exhausted my questions. And we will be moving to the questions that have come to us over your Google Forms, after which, of course, we will open it up for other questions also. So I will read out these questions, and then maybe I will ask to whom these are directed, but others can also pitch in. So the first question, there are two questions together we can take. how can small or new FPOs access credit without collateral? And how to convince a lender if FPOs do not have sufficient business transaction but have good business potential? So these are the two things. It's a small FPO, cannot offer collateral. Its history of business is small, but there is a good potential. So, Shantanu, do you think such a FPO will qualify for a loan?
Yes, yes. In fact, most of the banks are now aligned with only 6 months seasoning, right? 6 months seasoning. So any new FPO can apply. New means 6 months. Can apply to a bank. Now, I just want to put a counter question. Is that today, with the change in, the new monetary policy which has come, I will not say policy, the rates, downward revision in the bank rate, repo rate, and also release of so much money in the banking system because of the reduction of CRR. The banks want to lend for sure. In fact, banks have a challenge of lending this excess liquidity. Now, who will not give you money if you are eligible for that? But unless you have a business plan and you come up convincing to the banks obviously with no prior experience. Krutti is working in a bank like Bank of Baroda with 250 loans or 300 loans, not more than that. These should be given by one branch, not by a bank, or even 330 by SBI should be given by a bank, because we have got branches in State Bank who have given 400 crores to SHG, 350 crores to single branches I'm talking about, right? So it's all about the ecosystem getting matured. Second is the seamlessness of credit guarantee cover of NAP Samrakshan will come in maybe
so that point is noted, sir, but of course, NAP Samrakshan is not in this panel, but we'll convey.
No, that's okay. But CGTMS is always available. CGTMS cover is always available to bank. So I don't think that the banks are not giving loans only because there is no collateral. It is the basic eligibility, understanding of the business model, and the kind of people behind FPOs. That is what is the principal thing which matters for granting a loan. Because
the FPOs,
to the FPOs. Because I asked this question multiple times when I am confronted with this question in meetings, that would you like your money, which you deposit with me, to be given left, right, and center? Nobody says yes to me. As simple as that. That you give me your hard-earned money, say, of all your family members, and allow me to give loans left and right and center. Nobody will allow me. So banks are a business of trust also. So that's why the underwriting standards and everything comes. Unfortunately, the challenges are from both sides. We are the bridge which can stitch both sides together. As Mahesh is doing some matchmaking kind of.
So, Krutti, one more question to you. One more question to you is, what can an FPO do to build trust and long-term relationship with the lender?
Okay.
So, philosophical question.
Fine. But actually, I was trying to add up something to Shantanu, sir.
Please go ahead. Good.
Whatever I was adding up probably would answer this question. Sir, my point is, like, a lot of people say why banks are not coming forward for the collateral-free loan. And then the second is, how do they build up the trust so that they can get the collateral-free loan? I will cite you certain examples. I got a case from a gentleman, CEO of the FPO. He sends me a DPR and then he says, sir, we are planning to put up this dairy unit and all that. Then I started questioning few things to them, like, have you seen a dairy? Have you understood the cycle? Have you understood the model, everything? Then they said that we have been backed up by a consulting team. If you are not convinced with the dairy project, I have several other DPS made. I can throw them to you. You choose which of the project you want to go ahead. So now it is not the bank to decide that what activity the FPO should be doing. So here the first thing is, you might be sound, you might be good, you might be having a very good business plan or capability to execute that, but then the approach itself does not give the bank confidence that you can carry it forward. So here the trust is getting deficit. Second is, before even we plan for getting into a big project, we start thinking for a smaller execution.
Right.
Let's say the same example, if it is dairy, those guys were planning up to put about some 200 animals. Then I said, when it is about 200 animals, have you planned up like what is the operational activities, who would be managing it, where will be the sales constructed, how would the members be participating in the regular activities? Then he had no idea about it. Then he says, no, we'll operate everything, will whatever profit will be there, that will only be as a dividend passed on to members. Then that's what is not the prime objective of establishing an FPO.
Right.
Now, if what I expect as a bank is, if you have run with 5-10 animals, then tomorrow if you are coming with a very big project and collateral free loan, then the bank will be happily coming forward and partnering with you, because they have this background experience, they have this trust on your execution capability, and then they would not be very stringent or what do you call,
Thanks,
pounding
Krutti,
upon you.
and yeah, we will move to Himanshu and then Mr. Mahesh.
Yeah.
With the hands and
So, see,
quickly.
if we want to make FPOs bankable, or if we want to increase the lending portfolio, then each stakeholders, whether it's banks, ABB or FPO, they need to play a little bit extra efforts. Like FPOs, we need to go to the banks. To be honest with you, banks will not break their heads with the FPO like NBFCs that are doing. Banks, they don't have that kind of time and
absolutely.
resources and everything. So you cannot expect bank that they will go to the field, they will understand the business in a detail which FWWB or let's say Samunnati or even Nepkisan is doing. So as a sector, be it FPO or CBBO, we need to go to the bank with risk and its mitigation. Let's say most of the FPOs are required loan for procurement activity. So you go to bank saying that I have this many farmers, I want to procure their produce, I will sell it to this particular buyer. So their market, and banks can give you CC limit or some short-term loan. So majority of the loan requirements are for working capital, for procurement only. We have not reached to that level where we will need term loan, or because see, the success ladder, first step, there is a lot of crowd in FPO data. Like if you look at FPO sector, so no one has reached the top. The crowd is on the first step only, and it is becoming very crowded. So it is difficult to manage. So as a bank also we need to look at each FPO with different lens. CBBO needs to control how many FPO they can manage and they can promote. FPOs need to build their governance, mobilize local resources, involve with the record, improve their record keeping, because governance and integrity is the most important thing in lending. And agriculture loan, if you have product, then it should not go bad. Market fall ho gaya, then you can still recover 50% of the amount.
Sure.
But most of the loan default based on integrity of the person itself.
Mahesh ji, your turn. You had something to say.
I was unmuted. Yeah, I just wanted to add one point. That is like what has been told by my banker friends again. No bank will want to keep away from a lending where they are sure that they're going to get their money back. And when you look at it from the point of view of NPA, like in some other discussion also I was saying that maybe some of these banks who are reluctant to lend today have burnt their fingers somewhere in some FPO financing, right? So on an individual level, what I would tell to the person who's asked this question, that how do I make my FPO bankable? Very simple. Try to get the branch manager to your board meeting, where he looks at the functioning of the FPO, and if that convinces him that it is a democratic way of functioning, where, because you see the number of people, number of players in the FPO market, many of them, if not, there may be minuscule people who would have done this, but many of them are in the FPO market only for the subsidies, only for the grants. the actual FPO is not an FPO actually, but it's okay, hamara chacha, some uncle, some tau, someone is the board member, and it's not a FPO per se. So once the branch manager or the person who's at the field level convinced of this, then there's nothing going to stop. The same, if I can give the example, same thing what Shantanuji was telling a little while ago. SHG financing, we broke our head, and today it is reached such a level, trillions of rupees. So here also it is just a teething problem, but unfortunately, till we grow teeth, we can't
So
take a
yeah,
bite.
so there was a question that came up saying, can you invite the manager of a bank to your board? I think we won't have an answer to
Yes.
that right away, but that was just a question. And with I
Yeah.
will ask one more question and then I hand over to you if the audience has more questions to ask. And this one I will direct to Narendra. The question is, what role can technology play in improving lending to FPOs? And are there any pilot models where digital lending platforms have successfully financed FPOs? So maybe Narendra and even Tarun, if you have some experience you could share about using technology and digital lending, then we'll open it to the live audience. Yeah.
Right. Thank you, sir. Sir, if you look at digital lending in this AI era, definitely, as I think even Tarun also talked about the tech that they integrated with Sature or whatever the company. See, for there are techs that we have developed especially for farmer lendings and all, but FPOs still, this is still an emerging market, and right now we have not come across any digital or tech based apps that are catering to FPO lending. But sure, definitely that is not impossible, definitely can be. In future we can create some tech or digital lending platforms for FPO funding.
Right.
As of
Thank you.
now, I don't see any a tool that is catering to FPOs. Over to you, sir.
I agree with Mr. Narendra. So as of now, it's not there. But one piece where I feel the digital tool can definitely add value is, as of now, the loan to FPO is given on the past performance. So if you see 1 year goes in just getting the licenses, you can't get much loan, and then many of the banks now, like, it's 6 months, but earlier it was 2 years. So by the time you pass 2 years in your last year or third year, when you get support, you have very less business volume. So when you get actual loan, you have already touching 3 years and you don't have much to show in your books. But if digital tools are there, which can capture the potential of business depending upon farmer, their land holding, crop they are growing, and area they service. So depending upon the potential business, if 50% of that or any haircut can be given, so it will be actual, and depending upon business plan also. So business plan versus what is the actual potential, because FPO, BOD, CEOs, they are not able to understand what is lie ahead and what they can cater to. But digital platform can definitely, month by month, village by village, at FPO level, product by product, these things can really help, and then loan can be given to cater to that business opportunity. So there I see is huge potential.
Thanks so much. Thank you. It was a fascinating discussion that we have had, and over to
Just I have one
Ved.
point on
Yeah. Over
technology.
to Ved after that for the next 10 minutes if there are any questions. Yeah, go ahead, Himanshu.
Yeah, on technology part, no. See, now what we are doing, it is technologies are pushing their product. There is no need from the FPOs because FPOs are not matured enough as of now. They don't have that kind of volumes. So their things are managed by Excel, Tally, or some hard bookkeeping such as stock register and all. Since MFIs, how LMS came in, there was portfolio was so huge, so it was not, they were not able to manage. So there is no demand for technology as of now to manage the operation of the FPO. That is why many technology companies are struggling to convince the FPOs because FPOs are not feeling that need. उसके बिना उनका काम चलने नहीं वाला चलेगा नहीं ऐसा नहीं है. So that's why they don't require that kind of technology. If it is demand driven, then it will be beneficial for overall stakeholder, like overall sector, for lender, FPO as well as technology.
Ved, any questions that you think, or anyone you can unmute and they would like to ask.
No, Emmanuel,
Yes, sir.
I mean, he made a very valid point because
Ah.
many times the technology firms or
selling.
even the management firms want to actually
Sell technology.
cater to a need which is not there at all.
Non-existent.
I mean, initially, we have to make the FPO ecosystem strong. Making them digital, digital is the way forward for anything today. I mean, no questions. AI and ML and everything, all
But
discussion.
reverse question, sir. Banker wants a digital balance sheet. वो handwritten financial statement लेने को तैयार नहीं है. वो बोलता है कि
नहीं,
वो कंप्यूटर पे प्रिंट आउट लेके दो.
Maybe we differ and we don't have time to discuss this. But the thing is, instead of making them on AI and all and platforms, first let them, make them what the country made SHG strong, or even the cooperatives. If you see what Sahyadri model is there, Sahyadri in Maharashtra, Nasik, you must have heard.
Yes.
Yeah.
It's famous.
So, or maybe you have met Vilas Shinde also personally. All the banks are behind that FPO. Why and what for? Because they created a business model. They believed in the business model and they executed business model. And that's why I said that they had an ethos of the FPO, which they believed. And now every bank is running after them ki humse paisa lo. So it's basically a question of why the FPO is created and what is my business model. Just replacing a fertilizer trader cannot be a business case, honestly.
No, that is getting everyone agrees on that.
Yes. Secondly, I have multiple experiences where I have asked FPOs कि ठीक है आप बेचते हो माल किसको बेचते हो, तो वो कहते हैं सर हम ITC रिलायंस ये सबको बेचते हैं, वो आते हैं यहाँ से उठाते हैं, बहुत बढ़िया. But do they pick up all their produce? Answer is no. Then फिर बचा हुआ कौन उठाता है? बोला फिर बचा हुआ ये जो क्विक कॉमर्स वाला है वो सब उठा लेता है. मतलब फिर भी बचता है, कौन उठाता है? वो कोई नहीं उठाता. So whereas the earlier supply chain which used to exist or which still exists in the villages picks up the entire produce. Correct. A grade, B grade, C grade, whatever, and then they will do that. So there are multiple challenges where we need to mature our FPOs while taking along NBFCs and banks. I mean, that should be the way forward. Thanks.
Thank you so much. Thank you. Ved, over to you.
Yes, sir. So thank you so much. We have Mr. Vidur Khanna who has raised his hand. Mr. Khanna, if you're still there, a quick question input from your side also, considering we have a short time left also.
And to whom you are asking the question also, if you can.
Yeah, you can unmute your mic, Mr. Khanna.
Okay. Hi, good afternoon. Am I audible?
Yeah.
Hi. So this is Vidur Khanna from Clover Organic. So Clover is a CBPO. And over the last 2-3 years, we are incubating about more than 100 FPOs. And, we have worked with Napkisan. We've just started working with Samunnati recently. And I just have 2-3 questions. I mean, it's open to the entire panel. Number one is that, definitely Samunnati and Napkisan, we are very grateful. They've been able to plug a gap that the other banks weren't being able to fulfill. But the interest rates vary between 12 to 16%. And the farmers say that, we are getting KCC loans. So why should we, borrow, let's say, smaller amounts from such entities? So that's a challenge. Second is personal guarantee checks. Let's say Samunnati asks for, in the loan product. Some of the farmers don't want to give that. The directors don't want to give personal guarantee checks. And thirdly, I mean, regarding credit guarantee, would the banks, I've approached about 50 different banks. And I really only had success with the NBFCs lending. So there's a lot of gap between the banks and the NBFCs in terms of progress. So anyone can, just take on these, but these are some issues that we are genuinely facing.
Sure. Thank you so much, Mr. Khanna. Narender, you want to go ahead with answering to the first two part, and would also like others to also pitch in, but since it was quite focused on NBFCs, yeah.
With actually, see,
You have a choice. Yeah, you take or you
Yeah.
don't. That's it.
Sir,
If it
here,
doesn't work, don't take.
sir, here, I don't think I have much to say because
Absolutely.
Vidur, as Vidur said, he is already getting associated with Samunnati, and we know our rate obviously will be always be higher
Higher.
than the banks because we borrow from the banks and lend to it. Uh, I don't have much to say on this.
Exactly. Yeah,
But
yeah. I
Mm.
agree.
see, but the sector needs to have low cost
Right.
funding
For
because margins
that
are
again,
very thin. Yeah, it's a policy level like thing. If low cost fund is available and we are able to pass it to FPOs, then we should do it because the gross profit of any FPO is less than 7%, or
Yeah,
in trading it is 1% only.
Himanshu, so we are asking the government to provide subvention to NBFCs for lending. So that is what is.
Yeah. We should do
and
that.
again, Himanshu sir and Krutti sir should be helping us.
Okay, right.
Yeah.
Yeah, yeah.
Anyone
Your
else from
question
the?
is taken on record, but we don't have straight answers. Okay,
Yeah.
please go ahead.
No, it's not. I mean, if you permit me to
Quick,
respond to this,
quick
as far as the
points
banks
are
are
also.
concerned,
Yeah, quick point.
yeah, am I audible?
Yes, sir. I was saying just quick points since we are running short of time also.
Yes. I mean, the person who asked the question has approached 50 banks. So you can point fingers to a one bank or two bank, but if 50 banks fail, then you have an obvious answer for yourself instead of asking questions. It's a question of the ecosystem development. Same, I mean, JLG in this country, which are actually funded by NBFCs, and SHGs being funded by banks. The ecosystem of JLG is somewhere around 3.7 trillion as of now, and the NBFCs offer interest rate of 26 to 28%. The same or similar kind of population in rural semi-urban areas is getting funded through banks as self-help groups at around 10%. So there is no match. Because the purpose of self-help group is different and the ecosystem is driven differently with a credit guarantee cover, whereas GLG is funded at 26 to 28% by the NBFCs. So interest rates per se for FPOs have to come down, whichever way they come down, and the interest rates will come down only if one, maybe subvention availability to banks and NBFCs, number one. Number two is banks or NBFCs do not pursue risk. Even in the NBFCs, which he referred to, is obtaining personal checks. Why an NBFC will like to have checks of people? Because it pursues risk. So FPO as an ecosystem, if it is perceived as a matter of risk, the interest rate will always be higher and there will be the personal checks or personal guarantee kind of thing. That's why the long way is to get ecosystem right and get the bank funding, which should be around 10% plus minus, with an app subscription or CGTMC guarantee.
So, Ved, any more
Wonderful.
questions, please?
No, so I will just share my one core experience, in fact, being a practitioner. So many of the FPOs which we have seen being formed in the Indian context have been part of big central government or state government programs. And unfortunately, all of these interventions being top down have been more of a target oriented than process oriented. In fact, one of the core deliverables have been to get compulsory mandatory credit linkages to the FPOs, even if the FPOs themselves are not interested or not even credit ready also, in fact, in many cases. So there itself, due to all of this top-down pressure, many a times, a wrong mismatch of marriage, what we spoke about, the word was used also earlier. So that marriage fails also, in fact, in the longer run. So yeah, having said that, we have 1 or 2 more minutes. So I would like to extend on behalf of BAFA a warm gratitude to starting from Mr. Murray to accept the role of a moderator. In fact, it was a very tight schedule of 90 minutes to once again, build conversation on a very important topic. I remember mentioning of Himanshu in various talk series. Wherever we have met, he always refers to his 2010 ka conference where the ecosystem stakeholders, like-minded stakeholders, have been debating on this very important topic of financing to FPOs. But as Mr. Pense also mentioned during one of his conversations, the word of ecosystem maturity. So ecosystem maturity vis-a-vis SHGs, the FPOs will also take its own time, and hopefully BAFA initiative like BAFA Bharat Alliance for FPO Acceleration would play a very key role. So big thanks to Mr. Murray, followed by all of.
Wait, Srimati ji has had hand raised. Maybe we can just check
Oh
if
yeah,
she
yeah,
wants.
yeah.
Sorry, I joined the conversations late, but I was observing the conversation. But one key point that somehow we didn't touch. There are FPOs, like I'm working in the very remote areas and it's all rain-fed areas, and those FPOs are working purely on perishables, vegetables, right? These FPOs, unlike the plain areas, they are not working on crops like rice, wheat, where you can get good collateral. So in this, if the FPO concept, FPO formed under the scheme, scheme where they are mandated to take a credit, obviously they don't have a collateral or anything, where the bank can trust them or have the confidence to lend. In this case, how would the bank want to facilitate? Maybe it can be a thought. We can take it forward.
It's not about thought. The banks will never insist on a collateral.
Absolutely.
Yes, sir.
In fact, banks don't insist on collateral. Bank would definitely want CGTMSE guarantee or a NAP subvention guarantee in this case, and the banks are doing it. There is no question about it.
So,
I mean,
no,
banks
the
don't
personal
insist
guarantee
on
do
collateral.
come in. The personal guarantee do come in, right? For the director.
No.
And some of them don't
Personal
have use to the
guarantee?
score also.
Personal guarantee of the directors.
Yes.
I will make it clear, Madam Srimati Bhaskar, I suppose
Yes,
you
sir.
are, right?
Yeah.
Is that personal guarantee of directors is required because I have a counter question. If you don't believe your business, then you're afraid of giving personal guarantee as a director. If you're not afraid of your business and if you're not guaranteed to fail, then you will give me guarantee. Is it not?
Right, sir. So that is why
personal guarantee of directors is what is required because the moment you sign a document with a bank, your personal guarantee is inherent in that. And unless you own yourself, believe that my FP is going to succeed, if you believe, you will give guarantee, otherwise you will ask questions, as simple as that. But the banks will never insist for, number one, any checks or any collateral because NAP subvention credit guarantee is enough for the banks.
Okay.
The basic underlying principle again remains is the business model.
Okay, thank you. So I think I will at this point conclude this. And thanks to all the panelists who joined, very distinguished panelists with deep experience. And I think we have a champion for FPOs in Shantanu ji. So my job is done. Future जो करोगे तो शांतनु जी को moderator बना दीजिए and advisor to the BAFA on credit flow to FPOs. Thank you so much, everyone. Have a great evening. Enjoy your weekend.
Thank you so much to all.
Thank you all.
Thank you so much, everybody.
Thank you so much.
Thank you so much, everyone.
Thank you, everyone.
Thanks, Mahesh.
Thank you.
Thanks,
Thank you,
Pooja.
sir. Thank you. Thank you.